And one. Santos in Sydney, look at that, off by 27%. Bernstein is saying in terms of Santos, it has been cut to underperform. They've got a price tag now of Australian $5.90, but of course it's nowhere near that at $4.89. And Oil Search is your biggest laggard, particularly if you look at the MRR function on the Bloomberg today. Manus, it is down 35%. That is the biggest drop that we have seen in Oil Search since October 2000. Sorry, it's holding at October 2008 levels, the biggest drop that it has seen in 35 years. Manus.
Jules, thank you very much. A couple of breaking lines coming through from the World Health Organization. This is the China representative, Gauden Galea, saying a return to workplaces, imported cases should be watched in China. The coronavirus can kill young people as well. So this perspective that it's only older people who perhaps have delicate immune systems are at risk, i.e. the over 60s. The message coming through now is about younger generation being under risk, being at risk as well. But of course, as we get more of China back to work, this is where the risks come along. So China has seen the peak in COVID-19, but there is no room for complacency. So if we morph that and model that on a global basis, we may have new models to extrapolate. Let's talk about the rest of the market. Stocks in the Middle East, as Simone was telling us, have dived. The world's biggest crude producers failed to agree the production cuts. We're feeling the reverberations, kicking off price war, sending oil into free fall. Felipe Pacheco gives us the trading perspective from across the markets. Kuwait down 10%. What are the outstanding moves in the region that we need to check out today? Kuwait crushed, Saudi under pressure. Take it away.
Well, Menes, it was one of those days that everything you looked, my monitor all day long was just red. And it seems like it's not going to be different today. You just mentioned Kuwait. It was the second time in a week that they actually stopped trading because the biggest shares there were down over 10%. Then if you look at just Dubai and the Tadao, the Saudi stock exchange, the biggest within the region, of course, they both had the worst session since the financial crisis in 2008. If we look specifically within the Saudi markets that has some of the biggest shares here in the region, of course, we have some of the biggest banking stocks and the Tadao finishing at limit down 10%, such as National Commercial Bank, Alima Bank, and also Samba Financial Group. That's seeing what we have out there on the oil markets today, the 30% plunge for Brent. There's no indication that we are actually going to have any kind of recovery in the region today.
What about Saudi Aramco? I mean, we saw shares come under tremendous pressure in trade on Sunday. Now you've got this drop down 30% in crude. This is going to be a hard open.
Definitely, Youssef. We saw Aramco actually starting the session yesterday below the IPO price. It was the first time that the stock actually reached that level. Somehow investors were expecting this to happen because of the news that we had over the weekend. Right now, I would say that it wouldn't be surprising for us to see this stock actually getting another leg down close to 10% maybe. It didn't get to that level yesterday because the intraday low was around 9.4%, but well, the scenario is actually much worse than what we started the day with yesterday. So Aramco is at the epicenter of this price war that we just talked about. It's a very, very meaningful and important stock for the Saudi market, but it's being extremely penalized in a situation like this.
Felipe, thank you very much for that. That's our markets and equities reporter, Felipe Pacheco. Well, where does all of this leave regional bonds? Let's get to Zena Risk. She's the Director of Fixed Income at Arcom Capital. Joins us around the set. Zena, welcome back to the program. I want to get first a reaction from you to these enormous swings we're seeing, and especially the cratering of crude oil.
Actually, we woke up this morning to what looks like Armageddon. Like everything's down across the board with the market. The OPEC plus non-approval, Saudi starting the war. I mean, everything seems down, and it seems like it's going to be this way for the foreseeable future.
To what extent? A number of people are contacting me on IB. They're talking about value at risk. They're talking about the pressure from value at risk models causing liquidation and more pressure. To what extent is that at play here, or will it play here?
I mean, you've had a lot of volatility, and these models usually exacerbate these volatilities. So yes, this is obviously a risk we're at now.
How does that affect some of the specific regional names? And I'm thinking here along the lines of Saudi Aramco paper and more broadly sort of regional spreads.
I mean, definitely oil under that kind of pressure caused pressure on the whole of the region, all the exporters. The stronger names, just like Saudi Sovereign, Saudi Aramco, the UAE, Kuwait can sustain this kind of pressure, but what we're worried about are the weaker links, which are Oman and Bahrain. If low oil prices are sustainable to a longer period of time, that would obviously cause significant pressure on the fundamentals.
Okay, so let's reflect back. The last time we saw a price implosion like this was 1991. The duration, according to Martin Malone over at Oral, he's just sent me through a chart, that lasted about 5 weeks. In terms of sovereign risk, what does it do to issuance? Would you see fast issuance early to plug the hole, or will they wait and just sort of try to ride it out?
Basically, I don't think issuance can come at these markets right now. They wouldn't be able to come unless at least you have some clarity on how long it's going to happen, what's going to happen, the impact. Because not only you have excess supply, but that comes with a complete drop in demand driven by a drop in production from the virus.
In your note, you say that the supply chain globally is broken. It's going to take some time to heal. When you look to the Gulf specifically, what kind of adjustments are you telling clients to make with their portfolios when it comes to their bond exposure?
Basically, we've previously recommended shifting away from high yield into IG positions. At this stage, we think that duration is still our friend despite these low levels. The surprise cut of the FOMC and the market reaction from a bull steepening to a flattening shows that markets are already discounting a drop to zero and are even starting to discount a potential QE. So we think that IG long dated are what we're after, but now given oil prices, we would be cautious at adding at these levels.
There's the JP Morgan emerging market bond spread. You referenced this in terms of the explosion or the blowout in the spreads. Until there is concrete shift in sentiment and data, do this spread continue to widen?
Absolutely. On a total return basis, you see a small recovery that mainly comes from the Treasuries move. But on a spread basis, we think that at this point it's pretty much catching a falling knife.
What do you expect the Fed then to do this week? Are they going to, or in the coming few weeks, rather? Do you expect them to wait until the regular meeting, or do they come out early? Because at the end of the day, this is a bit of a windfall for the Gulf if they do cut rates and do so boldly.
Absolutely. I mean, the Fed did it 2 weeks ahead of the FOMC meeting. That reminded us of the 2008 cut that came not long before markets unraveled. We think that, yes, the Fed might cut again in March, but we think that at this point is, again, filling a leaking bucket.
We talk about credit events around the world. You know, the risk is that liquidity seizes up, triggers credit event. You've just mentioned the sovereigns. Are you concerned in any way about a corporate credit event in GCC?
We might. We definitely might. I will not rule this option out of the table right now, but it's still very preliminary. We still have a very good credit quality in the region. Our corporates are still very strong, with a few exceptions, obviously. But at this stage, I wouldn't go as much as worrying about default risk, but I would not rule it out of the table.
We had dramatic news from Lebanon in the last few hours as well. What's your read on the political situation now that clearly everybody's at loggerheads and the clock's ticking?
I mean, the decision not to repay the debt came overnight. It came without discussion with the creditors, which means that once the 7 days grace period starting today ends, the 20s become automatically in default, which would lead to a cross default across the curve with just only 25% needed per series to accelerate. At this stage, Lebanon needs an external funding, and the IMF seems to be the most plausible, if not the only viable option that Lebanon can have. But obviously, this is a political decision. And it seems like personal agendas are taking priority over a way to navigate the country out of the crisis.
Okay, Zena, thank you very much. Zena Risk, keeping an eye across the fixed income markets at Arkham Capital. Up next, Saudi Arabia temporarily bans travel to 9 countries. And this month's Formula One in Bahrain, well, that could run without spectators. The latest on the virus impact for the Middle East. That's next. This is Bloomberg.
Got some breaking lines hitting the Bloomberg from the Japanese Finance Minister Taro Aso. Of course, policymakers around the world watching the sell-off in global markets with quite a bit of trepidation. He's saying that they're keeping a close eye on the yen trade in particular, but also opening up the door for potential coordination on the fiscal front with other governments, and also adding that the government should deploy fiscal stimulus. We'll keep a close eye on that for you, but now let's head out straight to Agam Bakir to get a check again on the Indian markets in Mumbai.
Well, things have only worsened and taken a turn for, well, the worst. In fact, we're looking at the Nifty and the Sensex now down as much as 4.2%. Well, we are currently trading at day's lows. There is a lot more selling pressure, and this is on higher volumes, which means institutions have come in and sold even further. There has been no respite for the Indian rupee against the US dollar either. And, well, just earlier this morning, it was at around 73.9. It has now moved above the mark of 74, which means that there's sort of further selling as far as the Indian rupee is concerned as well. A lot of concerns with respect to the Indian banking sector as well. Well, volatility continues to rise.
Agam, thank you very much. Agam Vakil in Mumbai with the very latest on the Indian markets. Saudi Arabia has temporarily banned its citizens and residents from traveling to 9 countries, including right here to the UAE and Italy, all in amid efforts to control the spread of coronavirus. Let's get more on the regional response with our Middle East economy and government reporter, Zainab Fatah. Zainab, I mean, this is quite a staggering move by Saudi Arabia. They've also got a city in lockdown in the eastern province. The backdrop to this, how big is this?
Well, we are seeing a lot of extraordinary moves coming out of Saudi Arabia and the region as a whole. Just a few days ago, we saw the Grand Mosque in Saudi Arabia being emptied for the first time, maybe in generations. People say in hundreds of years they don't remember an event like that. And right now there is a lockdown of this city in the eastern province after Saudi Arabian authorities said that around 11 cases were traced back to this city. Okay. This city is predominantly Shia, and they have, and a lot of residents have links to Iran, and they travel there for religious reasons. So there are a warning from the authorities there not to travel to Iran. If you've traveled, please present yourself to the authorities to be tested and or face prosecution.
We had the first coronavirus death on continental Africa. Just run us through a few of the details.
Yeah, this happened in Egypt in a hospital in Hurghada, and this man was a 60-year-old tourist from Germany. He arrived in Egypt about a week ago and went to Luxor, and he finally succumbed to the disease in Egypt. Now Egypt had several. This is the first fatality, but they have around 58 confirmed cases, and 33 of those were linked to cruises. So a lot to deal with in Egypt, as they don't want to stop tourism altogether, but at the same time they have to deal with this.
You just see the imagery of those cruise liners lining up in New York Harbor. Talk to me about Formula One, because there's going to be a lot of petrol heads out there who have booked the tickets, and you might just have to watch it on a video. This is radical stuff, isn't it?
Absolutely. I mean, if you think about it, what it means for Bahrain, this is their biggest sporting event ever. It's never been held before, except during the 2011 Arab Spring, where Bahrain faced a lot of demonstrations and issues. So this is an extraordinary step that they are taking, and they are doing it to avoid a lot of other cases, because they already have 85 cases, and they've already taken a lot of measures to kind of stop travel and ensure that their citizens are being tested, who they suspect are being tested.
Zaina, great reporting. Thank you for that. That's our Middle East economy and government expert, Zaina Fatah. Now, let's get to the WHO, because their China representative says there is no room for complacency in the fight against the coronavirus, and warned the outbreak can kill younger people, too. He spoke exclusively to Bloomberg TV earlier from Beijing.
Now we have seen a definite decline, and indeed this weekend there's been a milestone that was passed in which China nationally reported less than 100 cases, and then on the next day less than 50 cases. This indicates that at least one peak has passed, but this is no guarantee that it will remain so, and we have to remain vigilant. There is no room for complacency while the virus is circulating anywhere in the world.
Where then are the next danger points that you would be looking very closely at, particularly as a lot of the country, between 60 to 80% that we estimate, is coming back to work and going back into communal spaces? What are you looking at as the potential for risk of reinfection?
You rightly indicate that the return to to a full economic activity has to be closely watched. Of course, there's every indication that this can be done, and we are seeing how different grading of emergency or risk level is being done in China with a very wide range, with a 4-level grading, where there's low-risk provinces and high-risk provinces, and the return to economic activity is being carefully calibrated and watched. This is a very important point to keep a lookout. Of course, there's now many of the new cases being identified, reported in the recent days, have been imported from other countries that are now facing the epidemic, and therefore that's another possible cause of resurgence. So looking at the re-entry into work and the potential re-importations are two major points of vigilance.
Yeah, in fact, I think in the Monday numbers, the only cases outside of Hubei province were actually imported cases from Iran. So is that really a hotspot from where you could see further community transmission? And where else would you be looking at? And is there really a heightened concern that we could see a second wave of infections?
There's always the possibility of resurgence, and it would be dangerous to just identify one country. I think it's important to be looking at all the places where there is community transmission happening, and there's WHO headquarters has published quite a long list of affected countries. WHO remains of the same advice. This is not an advice to do travel bans or trade restrictions. It is about showing the vigilance.
Let's talk about the Japanese economy. Well, it contracted more than initially estimated in the last quarter as the coronavirus threatens to push the country into recession. Our Japan economy editor Paul Jackson joins us from Tokyo. Paul, so what is the math? How does it stack up in terms of the possibility of a recession?
Well, I think we're on track for a recession. This isn't the figure that confirms that. This is backward-looking data from the fourth quarter, but it's worse than we expected. It's a 7.1% decline. That's the worst in over 5 years. It shows there's no momentum in Japan's economy. It's in reverse. And this was before the virus hit. This is before we've got this oil shock taking place now. I think most economists are now seeing not only recession in Japan, but they're also seeing negative growth over the whole of 2020. That's a contraction of the economy this year. Digging into the figures that we've got today, I think we can see consumers are not spending after the sales tax hike last year, and they're not going to be spending now with the virus keeping everyone at home. I think, though, one of the really worrying numbers in the figures today is that business spending by companies was being cut at the fastest rate since the global financial crisis. And again, that's before the virus hits.
Well, let's talk about policy response. We've seen a couple of new lines come down, Paul. Good to see you this morning. Come down from Taro Aso. And I find it fascinating. He's now talking about the possibility of a coordinated, collaborative front on the fiscal response. So this is a bit of a shift to the global level, but also there could well be an issue around the currency, isn't there?
Yeah, that's an interesting comment. I mean, you know, the G7 acting in coordination with fiscal stimulus, that doesn't really happen very often. So that would be a bit of a shift in the way policymakers are responding. But, you know, we're not there yet. I mean, these are comments being made. What he has said just in the last few minutes is that fiscal stimulus is needed for Japan. This follows up from the tax chief of Shinzo Abe's administration saying that an extra budget is needed in spring. So already policymakers today, Monday, have moved on. They are thinking, right, we're going to have to hit this with some fiscal stimulus in the near future. And this is going to take place. Also, just breaking news is that the Bank of Japan and the Finance Ministry and the FSA, they're going to be meeting in half an hour to discuss things.
Paul, it's been great catching up. Thank you for that. That's our man, Paul Jackson, there live from Tokyo. I want to circle back to the market action, really to the very heart of the global sell-off, because it all started when the world woke up to a market reaction towards what happened over the weekend in OPEC Plus, the fracturing and the ultimate cratering of the oil price as a result. We are down at the moment 26.6. We were down as much as 30% at one point. That is the most since the Gulf War in 1991. An all-out price war being launched. The folks at Goldman Sachs have now penciled in maybe $20 a barrel is a likely scenario as well to the downside. Natural gas at a 21-year low on this route, and the reverberations being felt across asset classes, including the havens.
Yep, to the bond market, all sub 1%. I'm talking about the U.S. Treasury curve. 30-year paper, according to Alan Greenspan, has a risk of going to zero. What is the Treasury market? There you go. Actually telling you. We broke 0.5% on 10-year government paper for the first time in history. This could be a recession indicator, according to Joachim Fels. That's what comes next. What are these markets actually beginning to price in? We're hearing more about a fiscal response from the United States of America, a coordinated response, according to Taro Aso, in regards to fiscal policy. This is not a global financial crisis. This is a global health crisis, and that takes a different policy response to GFC, according to Mint Securities.
We see the markets yearning for a better, bigger, bolder global coordinated policy response. Quick note on FX as well. I mean, what a day it is for some of these key plays, including dollar yen, which is hovering towards the key 100 level, and policymakers in Japan said they're watching that very, very closely. You got the Aussie dollar getting absolutely pummeled, down 1.6% there.
Yep, we'll carry you through the next hour. We're live in London. We have Rapid In on energy. We got all the markets covered right here on Bloomberg.
Founded more than a century ago from humble origins, L'Oréal is now the world's biggest beauty products company, specializing in cosmetics, hair, and skincare, it boasts an international portfolio of 34 brands and has a market cap of more than 105 billion euros. At the helm, a man who's dedicated his entire career to the company. Over 4 decades, he's covered all facets of the business. Today, on Leaders with Lacroix, we meet Jean-Paul Agon, Chairman and CEO of L'Oréal.
Monsieur Agon, thank you so much for speaking to Bloomberg.
Pleasure.
What happened to L'Oréal in the last 10 years? Innovation, your share price has grown. Was it exciting times?
Yeah, very exciting. You know, I started as a CEO 10 years ago. It has been 10 years very exciting. Of course, we had a crisis in 2008 and 9, but globally the business has been very good. We have been growing, acquiring brands, launching new products, gaining market shares everywhere in Europe, USA, China. No, very exciting, fantastic.
What's been the most fun?
In fact, the most fun has been the past 3-4 years, because thanks to the digital revolution, everything has been transformed. And as I tell my teams, I think that this industry, our business, our company has more changed in the past 3 years than in the previous 30 years. So it's an amazing time, extremely exciting.
So is this the way you sell, or is it the way that people actually look at makeup?
No, in fact, it's the relationship between brands and consumers. In fact, the digital has completely transformed the relationship between the two. Before that, you know, brands were talking to consumers, pushing towards them information or whatever. But now the consumer has taken the power. The consumer decides how he wants to see the brands, what he wants to know, how he wants to discover them. Digital, in fact, creates a relationship that has nothing to do with what existed before.
But isn't it much more difficult, therefore, to control your brand?
Yeah, but at the same time, it's more exciting, and it enriches the relationship. So now, thanks to digital, we can communicate the content of our brands. We can do tutorials to explain how the products work, how they should be used. We can have a personalized relationship with consumers. So it's a completely new dimension. It's much more rich and exciting.
So what sells at the moment? Is it the luxury brands or is it the more consumer brands?
This year, luxury. This year, luxury has been booming everywhere, mostly with Chinese consumers. You know, Chinese consumers are fantastic. They love beauty, they love luxury, they love our brands, and our business with Chinese consumers everywhere has been booming.
L'Oréal's global reach stretches across 140 countries. About 2/3 of its sales are generated outside of Europe. Much attention has shifted to China, where strong demand for high-end lipstick and perfume is driving growth. In 2015, China surpassed France to become the group's second biggest market behind the United States. Some of the success is being attributed to selfies, with camera-conscious millennials buying more makeup than ever before to look good instantly.
Have you had to adapt to the Chinese market?
Yeah, in fact, the products we sell, not for all brands, because the luxury brands, for example, are the same all over the world, of course, but for our mass brands like L'Oréal, like Maybelline, the product that we sell in China are formulated in China by Chinese, in our Chinese labs.
Because of regulation?
Not only, but also because we want to create the products that are absolutely right for them, especially skincare, because their needs, their skin, their aspirations are specific, are different. So we formulate in our Chinese labs, we manufacture in our Chinese factories, and L'Oréal now is L'Oréal Paris is the #1 beauty brand in China.
I've also been reading that one of the most popular products is actually a homemade, I guess, range of cosmetics wear, which is favored by the wife of the president, President Xi.
Yeah, it's a great brand, but still the #1 beauty brand in China, the preferred beauty brand by Chinese women is L'Oréal. L'Oréal Paris, they call it with the Chinese name, it's Pali Olaya, which is beautiful, by the way. And it's it's great because, you know, the L'Oréal Paris is the #1 beauty brand for Chinese, for Americans, for Europeans, for Russians, everywhere. So it's a great satisfaction. Yeah, not bad.
So tell me about your success in China. Is it through distribution? Is it through ads? Is it through celebrities? What's the attraction for your brand by the Chinese?
You know, the reason of success of our brands everywhere is always the same. It's number one, quality. You know, we for all our brands, our absolute priority is the quality and safety of our products, and it's something that the Chinese respect a lot. It's very important for them. Number one, innovation. Innovation is extremely important. It's an industry where you have to innovate a lot. You know, more than 15% of our products every year are new in order to keep innovation flowing very strongly. Of course, it's the imagery of the brands. You know, brands like Yves Saint Laurent, Lancôme, Giorgio Armani, L'Oréal Paris. It's a beautiful imagery, and Chinese consumers are very sensitive to that. They like it.
Is the US tough? A tough market?
The US this year is a bit tougher, a bit softer, let's say. It's not really tough, but it's a bit softer. Certainly softer than China, but it depends. You know, last year the US was very good. So every year, it's funny because every year the market roughly globally is more or less growing at 4%, but it's never made exactly the same way.
But so how difficult is it to predict what will work and what won't? Why am I using this mascara, not the other mascara? Why am I using this foundation, not the other?
Again, it's very, you know, when you know well your consumers, when you understand their desires, when you can guess their dreams or expectations, then you can really create what they will love.
What will the next 4 years bring? Is there a specific market that you think will grow more? Is it, you know, for example, men's cosmetics or something else?
You know, digital, I think, will be the most important element of transformation of the market. So definitely we're going to see the e-commerce growing. For example, e-commerce in China is already more than 30% of our sales for our mass market brands. So it's huge. So we're going to see digital growing. We're going to see probably new channels also emerging, like specialty stores, our own stores. We are very big in also growing segment is the travel retail, you know, the stores in the airports, because more and more people are traveling. So I think there will be new channels. In terms of regions, of course, the emerging markets are still growing, and our categories are growing too. Makeup has been booming for 2 or 3 years. I think it's going to keep booming. Skincare is growing too. So honestly, I'm very optimistic about the short-term, middle-term, and long-term perspective of this industry.
What do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products, it's unfair.
And a few secrets.
And a few secrets, but you can tell us, we're amongst friends. We were talking about what the next 4 years will bring,
Yeah.
and it's a lot more e-commerce. How do I choose my makeup online? It must be difficult to choose the right coloring.
No, because now you have some technologies that are amazing. You know, you can test online on your cell phone, for example, simulate the application of the makeup on your face, and then you see yourself with the lips covered with the lipstick you want, the shade you need, the powder, the mascaras. You know, I did a demonstration of that to my board, you know, completely made up, and it was they were ecstatic.
Was that for the launch of the app?
Yeah.
And so they said yes.
Yeah, I wanted
Fantastic.
I wanted to share with the board the fantastic progress of technology. It's amazing.
Oh, I could look like pure reds. Oh, wow.
The lipstick is moving with my mouth, and I know that I don't have any on.
It's like Amy Winehouse flicks. It's brilliant. I can't stop looking at myself.
So this is amazing because you also have to then change, I guess, your research and development. How much of the overall cost goes on actual digital products?
Well, it's difficult to say because it's everywhere, in every brand, in every division. But what I can say is that now, more in terms of media, 1/3 of all the media that we do now goes on digital. In terms of e-commerce, 7% roughly of the sales that we do go on e-commerce through digital, and it's growing 30% a year. So there is a shift happening, which is extremely fast, extremely strong.
The company that invented the platinum blonde is constantly innovating and developing new products as consumer demand changes. At its lab in Paris, scientists have studied more than 7,000 types of hair and are now experimenting with 3D printing. The hope is to one day help people suffering from hair loss. L'Oréal's already created fake skin to avoid testing products on animals and invented a UV patch to monitor exposure to the sun's rays.
We have the #1 R&D facilities in the world. We are spending roughly 3.5% of our sales in research and innovation. And obviously, the most important topics are hair, skin, and hair. This is where we invent and create new formulations for hair care, hair color, all type of hair products.
You also have a patch?
Yeah.
Is that right?
UV patch.
A UV patch, so you
Yeah.
put it on to see when you're overexposed to the sun.
Yeah, it's a creation that was made 2 years ago that we presented at the Consumer Electronics Show in Vegas last year. And it's a UV patch, you put it on your skin, and it's linked to your cell phone. And it calls you or it rings when your exposure to UV has been too high. It's a fantastic tool.
So do you think though there's going to be more of a trend, which I guess is between the cosmetics and the healthcare?
Yeah, absolutely. Yeah, and also with internet, you know, this triangle between beauty, health of the skin or hair, and Internet of Things is creating new opportunities, and that are going to be very useful for consumers.
What do you like about your job the most?
I love understanding people. You know, I think that one of my strengths is the capacity of empathy with consumers. So I have this capacity to understand, to feel, to guess what consumer want, what is their desires, sometimes their dreams, and then to be able to formulate products that will respond to these dreams.
Do you believe you have to take risks to innovate, or actually, do you?
Oh yeah, of course. Yeah, because every innovation by definition is a bet. Every launch is a bet. It's like a new film or a new movie or new music. You never know in advance. But that's the magic of it.
So what do you think you spend most of your innovation on? Is it, for example, making a lipstick that lasts longer? Is it kind of changing it a little bit? I know you have so many products, it's unfair.
And a few secrets.
And a few secrets, but you can tell us, we're amongst friends.
No, we are working on all categories. You know, we have 3,500 researchers from many departments, and they are all working on all type of cosmetics, skincare, hair care, hair color, all sun care. And because fundamentally, as I told you, we really believe first and foremost in terms of efficacy and quality. So you know, the mission of the company, which is beauty for all, is also not only beauty for all, but the best of beauty, the best quality, the best performance, the best efficacy, the best safety, and that keeps us busy.
3,500 researchers.
Yeah.
How long does it take from, I don't know, who has a concept of, for example, a new product, until that product being on the shelf for someone to buy?
Depends. Can be very quick when the formulation is easy. Can take maybe 6 months. Or when for example, the marketing guy has a vision, has a dream, but the labs don't know exactly how to formulate it, can take 2 years, 3 years. Really depends.
Mega volume on top, mega volume on bottom. Share it with your friends and buy makeup instantly.
One of the criticisms often leveled at the beauty industry is that it's only for young people. Is there any truth in that?
No, not at all, of course not. First, that would be stupid, because we are addressing all needs for all people, and look at our ambassadors. For example, Jane Fonda, Helen Mirren, they are not millennials. So no, honestly not.
Do you sell more to millennials or to people of a more certain age?
No, we sell to everyone. It depends the brand. The brands, of course, some of our brands like NYX, Urban Decay are more targeting young people. Biotherm or L'Oréal Paris may target other categories of consumers. But no, we cover the whole scope of consumers. And in terms of age, in terms of diversity, in terms of countries, Chinese, Brazilian, Europeans, everyone. It's a beauty for all.
So how do you sell to the emerging markets?
We adapt the products that we sell, of course. We make sure that they are affordable and that people can buy them. Brazil, for example, is very interesting because Brazil is the country in the world where the hair is completely unique, because it's such a mixed country in terms of ethnic origins that the blend is completely amazing, and that you have to create for Brazilian hair care products that are completely specific. And by the way, it's very interesting because sometimes they are the most demanding consumers, and so when you can create in Brazil a product that is good for them, then you can make it for the world, because it's going to be great for everyone.
Do you think Generation X cares more about this than millennials?
There is an urgency, clearly. We are not talking anymore about a potential threat. I mean, there is a clear and present threat.